Hello traders, Gary Wagner here, approximately 11:30 a.m. in Honolulu, making it 4:30 in New York City on Friday, finally, the second day of March 2012, and this is the daily report for gold and silver. Following a modest rebound yesterday from an incredibly drastic sell-off day before yesterday, we do have the precious metals down nominally. Currently, as you can see, 1712 in gold, and in silver, we're looking at 34.76. And when we take a look at that, that's about $5 off on gold and about 73 cents off on silver. You know, this week can be best characterized as an incredible bloodbath. When we take a look at this market and we take a look at this one-day move right in here, you can see that this was one of the strongest sell-offs, I believe, in the last 3 years. And I mean, just looking at this candle itself, this is one large drop. And when you consider the kind of move that it made and where it took the gold market to on a intraday low, I think you're going to find it quite interesting. Now, traders, what I have done is a very, very simple Fibonacci retracement in which I have plotted a sequence from the beginning of the rally, which started December 11, to this peak. And then if you look, it came down precisely 38%. A very, very valid retracement if, in fact, we are now in a very minor corrective phase. Now, what do I mean by that? Well, what I'm looking at right now is the fact that we have probably just completed our intermediate one, the impulse wave number one. And as you can see, we have a total of 5 counts that took us to this particular point, almost to 1800. Not quite, but almost. Now, when the market came down, it retraced in one day 38%. It is my belief at this point that we're probably going to see some sort of a B wave and then a final C wave, either a flat or a zigzag. My personal belief right now is a flat or truncated, especially since we had a truncated fifth wave here. Now, what I find that is so interesting is the way that the market sold off and the fact that some really strong buying came into the market on the following day. And that's quite evident when you take a look at this $25 move that we experienced yesterday. You can really see the fact that this market has taken off and now is doing a little bit of backfilling. What is my sense for this market? I looked at it all last night wondering if we should actually go in and recommend a buy, because my belief right now is that we're probably going to see this market go up anywhere from, say, 1735 to maybe 1750. Now, what am I basing that on? Well, I'm basing that on a simple Fibonacci retracement again, but what I'm doing is I'm doing a retracement of just our A wave, assuming that this is A, and let me line that up for us. And here's what I'm looking at. On a typical B wave, you will normally see it go anywhere between 50 and 75% the move of our A. So that if in fact it goes to 50%, gives us 1735 to about 1760. And that's my target right now for this next trade. Now, we've had really, really strong support at 1706. That seems to have held. Of course, we got a hard break below it, breaking down to about 1689. However, when we look at the activity through the evening last night, it really had a lot of difficulty going to or below 1706, each time it did that, what we saw were buyers coming into the market and pushing the market back up. And traders, really, to clearly illustrate that point, I've put up a 60-minute intraday chart. And here's what we want to look at. Of course, this is that drastic one-day sell-off. Takes us down below 1690. $25 higher the next day. And as you can see, this low right in here, this is 1700. So when the market itself came back down, it did find good support there. It kind of meandered back up. It was up throughout. And as you can see, here we have that double bottom. Now, my sentiment is that we have a very, very good opportunity to play this from the long side and play this B wave, because it should give us a clip, as I said, anywhere between 1735 and 1760, and that, of course, is basis the spot market. And traders, finally for gold, let's just take a quick look at the weekly chart. Of course, the one thing that I see very, very clearly, and I find pretty interesting, is when we take a look at these lows right in here, you can see that our current print is just at or above that point. First thing I'm noticing. Second thing that we notice, of course, is that we are absolutely, this again is a weekly chart, but a engulfing bearish is the predominant pattern that we are seeing right here. Here's another engulfing bearish, and in this case, you saw the market come down considerably. However, you can also see scenarios where it did not really come down that hard, right in here. So it is something that we want to pay attention to. Realize we would have to have another down week to get a confirmation of that. And if we're still within that A wave, we could see it meander lower. My belief is that 38% sell-off, that single day that was one of the worst and furthest sell-offs in the last 3 years in gold, I think that's about it for our A wave, and I think that we are in a counter wave or a B wave currently. We are looking at our daily chart of silver. Silver, of course, also had a tremendous sell-off. In fact, percentage-wise, it lost more than gold did. But what is interesting is where it really topped out, because both in gold and silver, we had a resistance area that it just couldn't overcome. In this case, that resistance area is a 50% retracement. And traders, it is a retracement of this move here from the second record top, 49.79, to the tremendous fall that it had. This is last year, to $26. And very quickly, this market sold off. I might add, when you look at this type of activity right in here, is kind of reminiscent of what we saw in the gold market. Now, we entered our long position January 2nd in both gold and silver. However, we did get stopped out. We took a profit in at 1580, out at around 1700. It was below 1706 on our gold trade, but we didn't get stopped out in the silver. So what I'm going to do is some analysis over the weekend to determine if we want to look at a particular place to get out of this market. We have raised our stops. We raised those yesterday or the day before, and we're at 34.74, and our stops are just below 34. If I recall, I believe it was 33.80. I'd have to check, but that's where I think we're at. And so we definitely want to take a look to see how this market is going to react, especially over the next week. We are looking at a weekly chart, straight candlestick format, and as you can recall, my strategy and target for this particular trade was this particular earmark of around $36. And in fact, for the briefest moment, actually went above 37 and almost touched at 38. But when you look at the week in review, you can see this long line representing the difference between the open on Monday and the high. This, of course, is the low and the close. Very, very interesting market, almost doji-like, almost shooting star-like. So we want to take a close look. I will probably put out a special trade alert on Sunday or Monday giving you my most current strategy in silver. And lastly, traders, I want to spend a moment and talk to you about my overall targets through the year. Because after this kind of a sell-off that we've seen in the market this week, I want you to realize that it really doesn't change my overall bullish sentiment. I am still anticipating $2,000 to $2,100 gold. I believe that that is going to be achievable by the end of this year, first quarter of next. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.